Now, for more on Brazil's economy, I'm joined by our global economics analyst, Saruhan Hatipoglu. Welcome back to the show.
Hi, Rachelle.
Now, Saruhan, it seems like the hits just keep on coming for Brazil. Let's start with this 5.4% decline in GDP. What sort of impact is that having on Brazil and its trading partners in the region?
Huge. It's not the economic numbers, though. Everybody expected some kind of a contraction in the economy, Rachelle, but the problem, I think, is if you look at the numbers, unemployment numbers that came in, it's double-digit unemployment now, and average monthly earnings of workers has declined again, which will have a direct impact on consumer spending. And now the new government also has to introduce some kind of an austerity measure because the budget deficit is out of control. So when you look at all of these things, I think, yes, 5.4% was bad, but I think the second quarter is going to be worse.
Now, Argentina is actually saying that they think that their GDP will also lose momentum because of Brazil. Should others in the region be worried?
Absolutely. Any country that has strong trade linkages with Brazil, and if you look at the Mercosur countries, they're the ones that will be immediately impacted. We're talking about Argentina, Paraguay, Uruguay, Venezuela. And Venezuela has its own problems, as we know. But the weak trade links that with the Andean countries, for example, Colombia, Peru, and Chile, will be less affected. But there are some econometric studies that show that not only will the Mercosur countries be affected, but they're going to be affected very quickly. So there's not going to be a time that is going to be waited on for the GDP effect to come to those countries, which is pretty bad.
It's difficult to see Brazil in this situation. It was such a success story just a decade ago. Now they have this perfect storm of slumping commodities, political turmoil, Zika, corruption, you name it. What lessons do you think the global economy can learn from what's happening in Brazil?
Well, if the global economy hasn't learned anything up until this point, I don't think it's going to learn anything from this point on, because this keeps happening to Brazil. But this time, the script was written by the developed countries with the QEs, with the interest rates falling. So relatively free money was available to all emerging markets, not only Brazil. And when that kind of free money, if you will, comes to these countries, they could do one of two things. A, they could invest it on productive capacity. The government can do really great infrastructure spending. Or they could spend it on speculative activity. And that's exactly what happened in Brazil. They needed to do structural reforms. They didn't. This has happened again in the past. I don't think anybody is surprised. Global economy has learned from it.
Now, it does seem that there is this tendency of a bit of over-reliance on monetary policy. Do you think that plays into it? Absolutely.
With the Federal Reserve doing what it did, absolutely. Because, again, when this money is available, corporations in Brazil took this money, this really, really, really low interest money, and then they've started doing speculative activities. They didn't invest in R&D, they didn't invest in innovation, they didn't invest in any kind of workforce development, really. The governments could have actually done some structural reform, labor reform, tax reform. All of these things are missing in Brazil. Instead, they just used the money for increasing wages, public sector salaries. And yes, it's a problem, and unless this new government addresses it, we're going to see it again.
Now, Saruhan, even in a downturn, sometimes somebody's always making money. What sort of opportunities are there, given what's happening in Brazil?
If you have a huge risk appetite, you can go and do some fire sale assets. With Petrobras is selling, oil giant in Brazil is selling some assets, iron ore giant companies selling some assets. So if you could do that, but if you look at overall industries, Rachelle, I like agriculture because, again, 40% depreciation of the real. Now, agriculture is not a capital-intensive industry, so they could export, they could increase their exports, and the government actually is helping the agriculture industry. In addition to that, education, 15% of 18 to 24-year-old Brazilians attends college. That ratio is about 40% here. And the government is asking private sector to come in and invest in universities and colleges. So that's a great industry, as well as real estate as well, because there's a lot of property, especially non-residential construction. The prices are low. That's a chance for investors to come and take advantage of that.
Now, Saruhan, one thing I do want to get to, if we're looking 5 to 10 years from now about the story of Brazil, is it going down the path of Greece? Does it have the tools to solve these problems? What would your prediction be?
Was it Charles de Gaulle who said Brazil is the country of the future and will always be?
That's right.
Yeah. So I think that's, unless these measures are taken seriously, Brazil is not going to be a success story. Will it be a Greece or a Japan? I think it can. It has potential to do that, but I don't think it will, because we are talking about a very strong middle class that's growing in Brazil, as well as a good labor force, and demographics is on Brazil's side as a young population, which we can't say about Greece and Japan. So I hope that's not the case.
We'll have more on Greece coming up. You'll be sticking around with us.
If you like what you just saw, follow us on social media and visit our website, cctv-america.com.